And joining me now to talk about what will be a busy week in the markets and what our viewers need to know is Marta Norton, Chief Investment Strategist at Empower. Marta, thank you so much for joining us this morning from Chicago. And how do these trade deals set up the week for stocks?
Well, it's interesting, of course, we've been waiting a long time to see what the trade deal looks like with the EU, and we have some clarity on that with that 15% marker drawn in the sand. I think what we're seeing here, and of course we have August 1st approaching, where there is a deadline where we'll see whether we're going to see reciprocal tariffs take effect or whether that's going to be pushed down the road. But I think what the markets are potentially going to celebrate this week is just a certain amount of clarity that has been offered to the markets after months of back and forth. That doesn't necessarily mean that there is perfect understanding of what the long-term economic or corporate impacts of these tariffs are. I think that's something that we're going to have to see evolve over the coming months.
Mm-hmm. What does this mean for international stocks? We had a guest on earlier saying that for some of these international markets, we have seen decent performance. Is that something that you're tracking too?
Right. Well, of course, international stocks have had this decade-long disappointment relative to U.S., and we've seen a reversal of that in 2025, partly due to currency effects, but also I think there has been some kind of pent-up valuation energy behind the international stocks. I think when we think about these trade deals, in some respects, the U.S. is winning on the terms of the trade deal, and yet because there is certainty and that the prospect of a trade war is being put off, I think that gives a certain measure of enthusiasm behind the international markets. And we have seen that, for example, with Japan, we saw a rally as that trade deal was announced. So I do think it is a boon for those companies as well. But of course, internationally, there are other challenges that exist as well, namely that growth has been really hard to come by. So I do think we want to be enthusiastic about the marginal improvement in valuations that we have overseas, but we also want to, I guess, keep that enthusiasm in check when we think about some of the growth prospects that are overseas as well.
Mm-hmm. I do want to talk about earnings season because that will certainly kick into high gear this week with some of these very large tech companies reporting. Because these companies are so big by market cap, they can have an outsized impact on the direction of the S&P 500, for instance. What is your expectation?
Right. Well, you know, I certainly echo that point of the impact that they've had. And we've seen that over the course of the summer. You know, we've had these macro headwinds that we've been contending with, but a lot of the enthusiasm for the market has come from the tech sector as we've seen these CapEx commitments continue, and the estimates there still quite high for what these companies are investing really on the AI front. And I think expectations for that investment continue, and also those green shoots in terms of how these companies are deploying AI. They're really on the front lines of deploying it, whether it's in their cloud businesses or just for some measure of efficiency overall. And so we're beginning to see what that AI impact can look like. And I think the tech stocks and really the Mag 7 and those select hyperscalers can really confirm that this week. And one other point I would make, especially as it relates to the Mag 7, with so many of these tech stocks, valuations are quite high. But when we look at the Mag 7 in particular, they were hit very hard by DeepSeek. They were hit very hard by tariffs. And so there is a little bit more valuation room there for those companies. So there is some room to continue to, I guess, kind of surprise to the upside for investors.
Mm-hmm. I do want to talk about the Fed because we are going to get a Fed decision this week. Comes after we saw images of President Donald Trump and Fed Chair Jerome Powell walking around the building last week. But there has been a lot of pressure coming from the White House on the Fed chair himself. What could potentially that mean for equities if that pressure indeed ramps up in the wake of that Wednesday Fed decision?
So I think if it feels like it's continued rhetoric where it's more I guess, kind of noise rather than substance, I'm not sure the markets will overly react to it. But I think if we see more substantive moves, particularly as it relates to kind of Chairman Powell's replacement and all the mechanics that go into making up the committee and thinking through nominations, I think that's something that could call Fed independence into question. And of course, that's the central question when we're thinking about how markets are going to react to the pressure that the White House is putting reporting on the Fed, it all relates back to that sense of independence. And if that sense of independence is compromised, I think that's where we could see pressure for the dollar. We could see pressure for U.S. equities. We could also see pressure on yields and where they head from here. So it's really kind of a trifecta when you think about Fed independence. Now, I think still at this point we are looking more at noise than substance, but it is something we're going to have to keep an eye on.
All right, Marta Norton, Chief Investment Strategist at Empower. Thanks again for joining us early this morning from Chicago.